Good afternoon, everybody. Welcome to TraderMerlin Show. It is your Thursday edition, tail end of the week, a preemptive happy Friday. Good to see everybody here with us. Today's show is actually fueled by your questions as usual. I received a question regarding Nvidia from, get the gentleman's name, Tim, was asking who Nvidia's competitors are. Can't seem to find any. So I'm going to talk a bit about that today because there is a lot of stuff going on, I guess, down the pipeline for some of the major names out there, and we'll talk about that. Now, before I get into all of that, I need to make a correction to yesterday's show because I know some of you are great fact checkers and you want to make sure that I am staying true, which I always love it when you guys correct me if I'm wrong. Yesterday, self-correction error. I was making fun, not making fun, but talking about how these Bud Light drinkers who are protesting, whatever your thoughts are on that's fine, they're going to go and drink some other beer. And I said they could go drink Corona and they could go drink Modelo and that would still benefit AB InBev. That's not true. AB InBev does own Modelo and Corona, but not in the United States. Inside the U.S., Corona and Modelo sales go to Constellation Brands. Anything else outside, it's AB InBev. So I want to just correct that one because I'm sure some of you are like, hey, wait a minute. They don't own Corona, so let's just correct that there. But they do have a tremendous amount of sales from Corona and Modelo internationally. I think it's their third most popular brand for AB and InBev. Number one was Bud Light. Number two actually was Michelob domestically. I thought that was kind of interesting. Anyway, let's move on to the topic du jour. So here's the question I was just reading. Tim says, who are Nvidia's competitors? I can't seem to find any. So I thought, well, let's just do a little bit of a special on that. The AI arms race, as I like to call it. And I saw a funny comment from I forget who he's an analyst for, but he goes, in the arms race for AI, there's only one dealer, and that's Nvidia. And right now that's true depending on what you want to get into. So if you're doing small batch AI stuff, there are some chipsets out there, some GPUs that you could use. But if you're doing something high end like ChatGPT or Bard or these other real complex systems like a Midjourney, you're going to need to have very high end designated chips, GPUs that are specifically designed. And at this moment in time, there really is only one person out there that's doing it, and that is Nvidia. And that's why they had just such blowout earnings. We'll look at their chart right now just to have that. NVDA. When we had Larry on a couple years ago, we were talking about Nvidia, and one of his big reasons why he bought it was Nvidia is going to be the chips that drive AI. Self-driving cars. So yes, to some extent that's AI, but that's a very targeted segment piece of AI. So he was really saying, let's look at Nvidia for that. That's the main play that he was looking for, Nvidia, because they were going to do self-driving cars and all the chip makers were not focusing on that. Nvidia was. I was saying that Nvidia is going to do great because of all their GPUs being used by Bitcoin miners. Of course, that has moved into other applications, ASIC miners, which are more targeted chipsets not built by Nvidia. And now all of a sudden, if you want an AI chip, I don't know what the new one is, but the A100, when I looked, was going for $10,000. Now I'm hearing they're going for $25,000 a chip just because they're so hard to get. There is one shop in town, and that's what vaulted Nvidia's earnings. There's that big gap up that we watched in the after hours yesterday. It had a little bit of a fluctuation today, but not that dramatic. You can see that in the after hours session, which are these, I guess, blue and gold areas, when he opened up, real quick sell-off, rallied back up to those highs, and then just slowly drifted down. So giving back a little bit of those gains, but all in all, the high point of the day was hitting $399.50, which is very close to putting Nvidia on map to be the next $1 trillion market cap company. And it could very well get there depending on what happens to price from here. So on almost all metrics for Nvidia, they were beating earnings. They beat on the bottom line, their data centers, revenue, all that type of stuff. So they're clearly the leader, and they gave a monstrous forecast for the next year that far exceeded any analyst expectations of growth, which is, again, why they pop like this. So time will tell how they pan out. But I think a lot of you would agree when you look at this price chart, and there's the daily, let's go back to a weekly just so you see longer term. You look at this price chart, Nvidia's just gone absolutely gangbusters, particularly since October of 2022. So really, in less than a year, it's gone from $100 to $400. Pretty amazing move there for such a giant company like Nvidia. So, in the grand scheme of things, what ChatGPT did is really set off the arms race, and everybody's going, "Well, who's got these chips? Who's got the GPUs? I need my data, man. I need my data." So not only did Nvidia have the chipsets, but they had the systems in place for AI, and they have the software to run all this stuff. So they're calling it a full stack shop, which means they have all the different steps of the process, which is awesome. But when you're first to market, right? When you're that guy during the gold rush in the 1930s and 40s, you're out here in California and you're the only guy selling picks and shovels, and everybody knows that you're sold out of picks and shovels and you're charging a super high price for picks and shovels because you're the only place people can get it. What ends up happening is all these other people look around and go, "Well, damn it, I'm going to sell some picks and shovels too." So what will happen in the next 6 months, I think, is you're going to see anybody that's either utilizing AI or the chip makers themselves, like AMD and Intel, which I see Jimmy T put in the chat, they're going to be looking at how do we get this chipset ourselves? How do we build this in-house, something that might be proprietary and designed for us? So when you run down the list, there's some usual suspects out there. First one that would come to mind, well, I'll do the second one. First one that comes to mind for me is AMD, but Jimmy puts Intel in there. So let's just look at INTC. So Intel is still not really focusing on GPUs, right? They're still predominantly focused on the CPUs, and I think as we go forward, we'll see more and more that CPUs are going to start to become relatively obsolete. I think it's going to be much more done on the cloud-based or using GPUs. So Intel I would put not as a contender at this moment in time. I really don't think that they're even remotely competitive with regards to Nvidia. Now, AMD has been making GPUs for quite some time. So here's AMD. You can see that this is a weekly chart again, having a nice rally up along with Nvidia, but nowhere near the magnitude. They both started rallying from October of last year, but AMD is just up about 150%, where it looks like Nvidia is like almost 400%. So an incredible move up there for Nvidia. AMD doing rather well. Now, one thing that's boosting and helping AMD are recent developments that Microsoft says they're going to be working with AMD on developing some AI chips. So right away, you have a behemoth of a partnership with AMD, one of the largest CPU makers, and then you have Microsoft as well, which has some of the other stack pieces, if you will, the systems in place and software that help run all this stuff. So I would put AMD as a well, I guess we have to run through them all and figure out exactly how it all stacks up. But I would put them in there as maybe a third or fourth place contender for Nvidia. Now, who else? Well, who else do you guys think would be competitors here? I'm curious to see what you guys think. Who do you think would be the ones that maybe might take away some of the market share from Nvidia here? And there's no right or wrong answer. Well, actually, there are wrong answers. You could say that Budweiser is going to take over the market share from Nvidia, and I'd say, no, that's wrong. Budweiser has nothing to do with chips. Micron or Taiwan Semiconductor, TSM? Okay. Those two are good. Micron, I'm not as prepared as I thought I would be. There's a few out there that, yeah, I think what you're going to see, Den, that's an interesting last name. I think what you're going to see, let's look at Micron. So Micron's been running up. I don't know what products specifically Micron is making. I don't know if they're GPUs, but if I was going to be looking at investing in this and trying to find the next ones, I would dig deeper into Micron and TSM. Right, Taiwan Semiconductor, obviously one of the major players out there, but I don't know if they're GPUs or if they're predominantly CPUs. Right, I believe that Taiwan is predominantly going to be CPUs, but I'm not an expert in this sector at all. A couple other ones that might be interesting for you, and they're not the normal suspects. They're ones you kind of go, really? I didn't think about that one. So let's go look at Google. So Google has their, they have their Google phone, and of course they are at the forefront of AI, and I think they're making it known that they're in AI, obviously with Bard, with their AI platforms. But I do think that you're going to see more announcements coming out here soon with regards to their chipsets. And their chipset is called Tensor. It's a Tensor processing unit. So what you're going to get is these chips that are specifically built just for AI applications. In this case, right now, Alphabet is using it for their phones, but this could be stepped up. And you also have other companies doing the exact same thing. So if you look at companies like like Qualcomm. So Qualcomm has Snapdragon, which is a direct competitor to Google's Tensor, right? They're almost the same thing in what they're attempting to do. And Snapdragon's gotten a lot of fanfare for what it's done for cell phones and just the speed of this compact chip. What they're probably going to do is shift focus a little bit and start looking at, NVIDIA doesn't make the chips. Okay, so they manufacture the pieces for NVIDIA, and NVIDIA puts them together in the GPU. So they'll assemble the unit, whereas they're getting the individual components from TSM. So there you go. Now, does that mean that TSM is going to be, if we look at the arms race, and the analogy here is you got to find the person who's selling the guns in an arm race, right? In this case, it looks like NVIDIA is selling the guns. But to Tom's point, NVIDIA is not manufacturing all the components of the guns. They might get their firing pins from this company, et cetera. So in that sense, yes, you're absolutely right. Why did you put this question in ChatGPT? Good point. Because I don't have time to do it live. Just wanted to show some of the competition. And I think that your major competition is going to come from Broadcom and from Google competing with NVIDIA. You know, you have a lot of other chip makers out there. You guys mentioned Taiwan Semiconductors, you know, AVGO, which RG just put in there. That's Broadcom. You know, I definitely think they're going to be a major competitor in this one. So let's look at some of the share prices. Let's go AVGO. There's Broadcom on a weekly. I mean, this is almost as nice as what you saw with NVIDIA. And you notice that everything really from October on, that's when that big surge started. And for Broadcom, you're looking at a gain in that same window of time of 75%. Let's go to Nvidia, which of course the earnings help there, but I'll go from the low point in October to where we closed out today, 251%. If you look at AMD, which has been drifting up nicely, but nowhere near the percentages, from low to where we closed today, about 121%. So TSM, which many of you have mentioned, and yeah, they are you know, a major supplier of chips, period. You know, one thing that I think is you're going to start to see, at least I hope that you get to see, is I hope that we get to see more chip makers in the United States. So one of the big problems I have with TSM is they're in Taiwan. You know, Taiwan has their issues with China, and who knows what happens if China comes in there and says, hey, we're taking over Taiwan, and takes over that chip company. That's a wild card for me from a production perspective for chips. So it'd be nice to see people and companies that can do that in-house and start to get more production locally or in the U.S., or at least in a location that doesn't have geopolitical tensions going on. On semiconductor as well. So a lot of semi firms. Yeah, I guess if I was going to be much more of an analyst on this one, Zed, I would dig deper into each one of these. And you guys bring up some good points. What I would probably do is bring up SMH, right, which is a semiconductor ETF by Van Eck. And I would just go to bar chart like I typically do. And let's go here and go to bar chart. Go to barchart.com. One of my favorite things to do when looking at ETFs is just type in the symbol. So SMH. We'll hit enter, and then once you scroll down on the left side, you'll see it says constituents. And if I really wanted to dive deep into this, I would write down every one of these names on this list. And there's, you guys have mentioned a lot of them. You guys have mentioned On Semiconductor. No one mentioned M-Chip. I saw Marvell mentioned in there. I saw Micron. You know, no one mentioned Applied Materials. Intel, you know, I feel like Intel has just really dropped the ball, but that's just my personal take. But a lot of names on here. I would want to see what exactly their business is doing. Are they the manufacturing of them? Are they the ones that are assembling pieces, like Nvidia, which is taking all these components and combining them to make these great devices? Because Nvidia is going to be reliant on some other people. The major component of this index is TSM, Taiwan Semiconductor, as well. And yeah, I would dig through each one of these. But at a high level, you just look at these price charts, you know that the interest is clearly in semiconductors, one of the best performing sectors we've seen in quite some time. Even companies like Meta. So Meta has a new chip coming out. It's called the MET, I think it's METI chip. MTIA chip. I always forget that one. It's called the MTIA chip. And what the MTIA chip stands for is Meta Training and Inference Accelerator. Now, they have this already, and I think that they're going to start pushing to release that. Once you saw Zuckerberg say, let's put a pause in the metaverse and kick towards AI, Meta has a lot of money to throw around at the development of these chips, and I think that Zuckerberg is smart enough to realize that AI is the, for now anyway, that new frontier that you got to be the first to market, and whoever gets there first does really well performance-wise. Now, notice the gains here on Facebook stock. or sorry, Meta. I'll forever call this Facebook, just like I'm going to call Google Google and not Alphabet. Meta up 186% from those October lows. How about Google or Alphabet? All right, so here's Google, which surprisingly looks to be one of the worst performers. I'll go to where we closed today. Only 49% gain. Marvell Technologies, not too familiar with I know the company, but I don't know exactly what Marvell does from a business perspective. They're looking one of the weakest ones out there, right? Just really the past few weeks have been big, but I think that's because of what's been going on with this talk track for AI in our markets going forward. So Marvell, doesn't look so good. Now, let me real quick look at some of your comments and questions, because I know some of you are digging and researching stuff right now. Broadcom has yet to report earnings. Yep. Taiwan Semiconductor are the fab for AMD, Nvidia, Apple. Right. They're the ones who are making the actual chips, whereas I'm going to make the whole GPU process that slides into my computer. That's going to be done by other companies. And so, who do we have that can replace a Taiwan Semiconductor? I don't think there's any. Obviously, Taiwan Semiconductor is the biggest one out there. But are there firms, particularly domestically, that may be able to replace Taiwan Semiconductor? I think at some point they're going to need to have more base layer fabrication sites like Taiwan Semiconductor at different locations around the world in case something happens with Taiwan Semiconductor. Imagine if something happened, Taiwan got invaded by China, and the Chinese government came over and took over TSM. Could they do that? Absolutely. That's China. They could say, there's now a government-run entity. We're taking over this business. That's happened quite a few times with businesses in China before. So that would be somewhat catastrophic for the global chip makers, right, that are getting their parts and pieces and basic chips from TSM. Samsung is the world's #2 contract chip maker and setting up U.S. manufacturing tech. Correct. And I'm hearing more and more companies working with Samsung because of that, particularly U.S. companies saying, hey, we're happy to work with Samsung because you're here, right? You're going to be in the U.S. Awesome. And I think you'll see more of this. I think you'll see much more of that. They're building one in Arizona. Excellent. The more the merrier. I saw a report that said that Taiwan gets all the materials for the chips from the USA, so they can't make chips from... Wow. I didn't know that. I'd love to read that report. If you can find that one, Karen, send that to me at TraderMerlin@gmail.com. I hadn't seen that one, but what a tangled web. I remember reading something years ago that we sell a lot of our timber to China, and then China in turn sends us toothpicks. And it's like, well, wait a minute, can we just keep the trees here and make our own toothpicks? I don't know. The strangeness of worlds and global markets. So for now, there is nobody that's competing with Nvidia. For now, my guess is that within 6 months, you'll have somebody that's got a chipset that's relatively competitive to NVIDIA. And, that begs the question, does that start to eat away at NVIDIA's market dominance? Well, the reason you're seeing NVIDIA do this is everybody needs their chips, and they're the only ones who's got them. In 6 months or a year, I think that this will start to cool down. I was actually looking at NVIDIA today. I had my finger on the buying puts button, but the premium was just way too expensive, and I couldn't bring myself to short it. I do think you're going to see a correction here, just way too extended in my opinion. But markets can remain irrational longer than I can remain solvent. That's a truth of the markets that was certainly evident in Nvidia today. All right, so that was it. That's really kind of like my 2 cents in the arms race. Not going much more in depth than that. But there's a lot of different companies out there. Some of which I think have interesting prospects for AI chips that we just don't think about. I don't believe that most people realize that Facebook and Google and Microsoft are working on their own chips, right? Again, they're going to be getting their components from other people and assembling it with that software and systems in place that work with that chip. So that might be part of the reason that we've seen such nice moves up in Meta, Microsoft, Google as well, because they're trying to jump in that space. I mentioned Qualcomm. I didn't look up Qualcomm. Oh, Qualcomm not looking good at all. Qualcomm looks like it's going the opposite direction. So I'd love to know what's going on with Qualcomm there, because their Snapdragon chipset is an extremely powerful little piece that, with more development, a little more research, I think that could become a nice competitor to NVIDIA A100 as well. Buy an NVIDIA depth spread instead of a put. Yeah, I'm not touching NVIDIA anyway. But back to the spreads, huh, Tom? Did you use IV to determine that NVIDIA puts were too expensive? No, I didn't. Just visually, you can chart the premium and just see how premium has surged on it. chart premium on Thinkorswim. Oh, I did sell puts today though. Budweiser. I did sell puts on Anheuser-Busch today. Just felt like I'm going to be comfortable owning at 55. I tried to do the 54s, but I felt like I got a much better deal on, or much better premium for the 55. So here is, let's just leave that there. There's your Anheuser-Busch. Sorry for the screen jockeying. The puts I sold today were the 55s. Those are the June 16th. I sold the 55 puts. I collected 73 cents worth of premium in case anyone was interested. You know, just letting you know what they are. And one of the primary reasons I chose that 55 level is you have this rally from October of last year. It rallied aggressively. It based for about 5 days and then ripped out of it again. So I'm using that as kind of the demand zone. I'll put a little yellow box around it, or the area that I think is relevant, which is right about there. So yeah, that's just one of the trades I opened today. Just sharing that with you in transparency, since I mentioned yesterday I was thinking about buying Anheuser-Busch, but in this case, I'll sell the puts. It's a $1.70 lower, $1.80 than current levels, and if it gets there, I'm fine owning it long term. I think it'll be fine in the long haul. I think this is kind of overblown craziness going on in the Anheuser-Busch space, but who knows? Could be wrong. Okay, what else did I have for you guys today? Once the Arizona fab comes online, you know, it's interesting because that type of factory comes online, it's going to create a lot of jobs down there, particularly depending on where it's at. You know, you open these factories, you know what Elon Musk is doing with his Tesla in Texas, you know, building a whole little Tesla city down there. All right, I'm going to go do some YouTube questions. Les is here. Were you the first one today, Les, or did you? Yep, he was the first one. All right, congrats, Les. He's back to number one position for joining the show today. Les says, what do you look for in a chart to see that buyers have pulled their orders in a down market? Well, there's nothing that you can look at that says definitively there's no orders there, right? It's just, yeah, there's nothing. And I know people will say that there are, and those people are generally the ones that are using level 2 screens and looking at liquidity. What happens is once you get down to a specific demand zone or a specific level, you can look on that level 2 screen and see a big block of buyers line up. But all that buyer has to do is tap that cancel button and all those orders are gone. So there isn't anything less. There's nothing that you can look at that says, oh yeah, they pulled their orders. Now what we can do is we can look at those levels and kind of get an assessment as to how strong that area may be. Are there still buyers there, or will it draw the attention of buyers if price comes back down to that level? So for example, on this Anheuser-Busch, I don't think that this is a great level by any means, but you notice it's on a big retracement here. You got a lot of panic and fear going on, and part of the reason I like it is just that it stalled here, went sideways after a big rally, didn't take profit, so people are obviously bullish, and then it ripped out. You know, there are ways to quantify, and that's something that, you know, we teach at OTA, is how are those zones structured? What is the, I guess, the rating or value of that support or demand level? Or demand or supply level, excuse me. That's kind of the key in determining if I'm going to put my orders there. There isn't really anything that says that they've pulled their orders or that the orders are still there. We're making an assessment based off what price did there in the past. That's all we can really do. How's the doggy bike cart? It's coming. It's coming. I got the wheels yesterday. I bought a nice zinc coated steel rod for my axle, got the wheels on. I need to do some cutting and fitting, and then I got to figure out how to attach it to my bike, but it's coming. I'm going to work on it a little bit this weekend. Hopefully in a week or so I'll have that thing done, and I'll send you guys a video of me trucking around with my German Shepherd piled in the back. We'll see how he likes it. He's getting old. You might be like, what the heck is this? Unfortunately, the tires are like a solid rubber. Expiration date on those Budweiser, Tom, is June 16th, so I'm going 3 weeks out. Not that long. And you know, if you think about it, I'm taking a risky trade here, right? I'm going counter trend. Got a really aggressive sell-off, and it's just ripping down here. I sold the 55s, and I got 73 cents worth of premium, which is about 1.4% rate of return on that investment for 3 weeks. So not too bad. I mean, it's a decent rate of return. Obviously, for taking that kind of risk, I think you should be rewarded with a little bit more. But it is what it is. And again, I think if it gets to 55 and keeps on dropping, I will look at a lower level. There are some other demand zones down there where maybe I'll sell some more. So, and I did 10 of those. So I'm in for 10 of the 55s on BUD. All right, next last question. Does this inverted, oops, sorry, you guys can't read it. Does the inverted yield curve signal a recession, or does it cause a recession? Ooh, boy, it's the proverbial which came first, the chicken or the egg, right? Really difficult to say. Because when you have an inverted yield curve, what's happening is it's the market driven by supply and demand telling you that they're willing to pay you a higher yield now and a much lower yield in the future. You get that inversion. Now, what that means generally is less optimism about the future. It means that the future is not holding the same sort of prospects that the current markets do. So, I don't know. I think that they're both kind of hand in hand. I believe that the market, by supply and demand, and for those for those particular bond expirations or maturities, that's the market saying, hey, our belief is that down the road, it's going to be hard times. So those yields are going to be a little bit cheaper out there. So I don't have a definitive answer. I actually say it's a 50-50. I would say part of it is they signal, and certainly it does. It's a reflection that the expectation in the future is going to be negative. But the fact that the yield curve is inverted may also cause that to be rather negative. It's a tricky question. So I think they're both right. I think it signals, and it also does cause a recession. Tricky one. I think that's all the 3 questions I got today. This is the one from yesterday. Let's go PLTR just real quickly, see what happened there. Someone's talking about shorting Palantir, and if you shorted Palantir, you were crushed today because it jumped up 4.99%. What do we had? Ride as well was one of the other ones. Down another 1.88%. We'll watch this one just continue to drift lower and lower and lower and lower and lower. All right, let me run through our top 7 here, just because we're there. And a year to year and have to have an effect. Yes. Yep. And there's certainly a lag time. When you look at the inverted yield curve, typically they say it's between 9 months and 18 months is when it starts to be impacted. But look at the inverted yield curve. Let me bring that up for us. Let's go to the 10 and the 2, which is their standard industry definition of it. I didn't really mention this, but you notice how we shot back up. We literally crossed back above the, so this is the 30 and the 2. I'm going to go to the 10 and the 2. That didn't cross above. There we go. The 30 and the 2 did, but the 10 and the 2 is still down here. We were still inverted by 70 basis points. Now, when did we really actually invert? Well, you could argue back here in August of 2019 was the first inversion. Well, we had COVID shortly after that, so that obviously would be our recession there. But then again, we broke down here in April of last year. And here we are now in April of 2023, and it's still drifting lower. Yes, we did bounce a little bit, but that just keeps on staying here lower and lower. And this is the problem that I can't provide an answer to because I've never seen it, where we have an inverted yield curve that's this long and this dramatic. I mean, it's been down here for so long. Ultimately, this is going to stifle growth in the U.S. economy. So not exactly sure how this all pans out. We've had Bill Addis on the program many times, and he's mentioned that his biggest worry right now isn't, the inverted yield curve or that. It's that it leads to stagflation. He says that's the piece that scares him the most. However, we haven't seen it yet. Again, for those who don't know stagflation, 3 components: inflation, growth, and unemployment. Unemployment should be rising, growth should be slowing, and inflation should be high. Right now, we have high inflation, we have growth slowing, but we have extremely low unemployment, so that's not a worry at all until, in my mind, the AI revolution starts to displace workers, and all of a sudden we see layoffs happening more and more. I think there was a notice today that there was more Facebook Meta layoffs coming right around the corner. No shocker there. I think you're going to see more and more of that over the next 6 to 8 months. So here is the top 7. Let's go scroll back up here to the top. I'll start at the bottom. We had crude oil with a big down move today, 3.38% slide. So it was looking nice, had a nice little trek up. I was expecting it to rally up to this area of supply between $75.50 and $77. Well, didn't even get close. Yesterday we rallied up to a high of $74.73, so about 80 cents shy of my target. And then today just came falling apart, down 3.38% to $71.83. Gold and silver, bummed to see my silver keep dropping like this. I really thought we'd stabilize on that one. If all goes according to this chart here, you're going to see gold correct and come all the way back down to this demand zone, which is, for me, between 1,919 and 1894 is where I have it mapped out there. So today was down 1.06%, closing at 1943. Not the best day for it. Partially, you had gold, or the dollar index continuing its great strength. We're up another 0.32%. So this is not helping with those commodity prices. You want them, weak dollar would help that commodity market. Russell 2000, negative 0.75%. Technically, meh, nothing. Yes, Liza, stop printing money. Good luck with that one. Good luck with that one. That's like telling somebody who's an addict in anything, just stop doing it, please. It's not good for you. Yeah, right. Give me another beer. Russell 2000, 1758 is our closing price for the Russell. Technically, though, it's still stuck within our smaller yellow box here. Maybe I'll change the color of this one a little bit later on to make it clearer, but we're still just kind of sideways in the Russell. Tom's loving that. Dow continuing to drift lower. It's been on a 5-day slide here. It begs the question, do we end up seeing this drop back down to 32,000 here? It's at 32,800 right now, and just feels like lower lows, lower highs. I don't see anything to stop this. There was a small little area of demand that it bounced off of today. That's why we had the little pop up there. But other than that, I just don't see it being that strong and causing this one to bounce back up. Podium time? Well, your S&P 500 you had a 0.82% gain, but look at the candle formation. There you go. Look at that candle formation. Just a huge, long-legged doji is what a lot of people would call that. It's had long topping tails on top and bottom, really much longer on the bottom, but at least there's a lot of indecision that went on today in that S&P, kind of whipsawing back and forth and ultimately closing with just an ever so slight gain, but big range there for the S&P. Second place, Bitcoin. While it's up 1.3%, I still am not happy with it because it's down below this 26,666 line, which we violated that a few times already, so that's obviously very bad for the big term picture. But happy that it had an update. It is a little bit of a hammer formation here at the bottom, but I wouldn't put a lot of emphasis on that one. 1.3% gain for Bitcoin at 26,565. And finally, the recipient of the Nvidia pump and the AI pump, NASDAQ 100, 2.39% gain today, ripping through those highs, hit 14,000 today. Let's just go take a step back and look at the monthly time frame so we can see where we are relative to all-time highs. So long-term, as Scott McCormick was saying, this is just a pullback in the bigger uptrend. And now the question is, do we continue and challenge these highs back at 16,000? I'll tell you, by the way that the tech firms are performing and the approach that they're going, which is more AI, focusing on getting automation into their systems and their platforms, more layoffs, more efficiency, you could very well see the NASDAQ challenge, at least at some point here, that all-time high. I think that'll actually happen in the near future, getting that all-time high on the NASDAQ and continue to rally from there. There you go. And that is your top 7. I already looked at the dollar index. We already looked at the yield curve, and I didn't see anything dramatic out there in the currency space. Most of the currencies are fairly flat. Talk about spending money. Air Force is missing like $485 million of F-18 parts. Shocker. No surprise. I mean, it seems like any entity that really doesn't have any accountability or no audits of what they buy or spend, stuff's going to disappear all the time. All the time. I'm a big fan of like CSI, NCIS. I love NCIS. And it seems almost like everybody, mention the word, it seems like everybody in these government-run entities steals. Like, it seems like every other 5 or 6 episodes of NCIS is about somebody stealing M16 parts or somebody stealing off boats and ships and selling them in aftermarket. Seems no different to me. So yeah, no surprise. I think that's probably an understatement. $85 million worth of F-18 parts. They're probably missing F-18s. Tom Barr says, from a trading friend, Nvidia mentioned the word AI 106 times on its earnings call yesterday, the highest ever in history. Yeah, well, I mean, it's going to be, Tom, this will be a term that's mentioned in everybody's earnings call from now on. Anybody's in tech is going to be talking about AI. And this goes back to when I first really got my first bubble, was in the dot-com era. In the dot-com era, everybody was, hey, we've got a website. Yeah, we're going to the internet. We're doing internet, .com, right? You could have Merlin, which is, let's say Merlin made manufacturing parts. I made F-18 parts. Let's just say that's what I did. My company made F-18 parts. It was called Merlin. Well, if I change my name to Merlin.com, share price would double or triple. I watched it happen like every day in 98, 99, 2000. It was crazy. Now AI is that term. AI is the new .com term for our markets. And you'll see more and more people just using AI. It's that new phenomenon, and it may create a bubble-like environment where all of a sudden people are buying those companies because of their prospects for AI. In this case, the names I've mentioned have been predominantly the big ones, right? Google, Meta, Nvidia, Broadcom, right? These are Qualcomm as well. These are big names out there that will probably do well over time. The ones that are going to really have the crazy price fluctuations will be some of these smaller ones, right? Names that we don't really know, not your common everyday names that change their name to something.ai or just AI firms, and all of a sudden they go skyrocketing because people are like, I got to buy AI stocks. Probably what we'll probably see here is an influx of money into AI ETFs, or just the structure of more AI ETFs where they have companies that are focusing on that industry. For example, we have blockchain ETFs, and blockchain is great technology, but I don't think it's that piece that creates a metamorphosis of America, right? It's just a different way of doing things that's much faster and more efficient. It could take over, but AI changes everything, right? It changes the way businesses function, interactions, employees, all that stuff. Same is true for Tronics. AI is different from robotics. Yes. So I would say that I think they're very different, Margaret. I would say that robotics is simply automation. You're taking a piece of code, and you are now telling this robot, I want you to move this widget from here to here. And I want you to over and over again, right? That's just your assembly line robotic. You program that in. AI says, take that robotics, but now I'm going to allow that robot to think. I'm going to allow it to modify its plan based off inputs, whether those are visual inputs or data inputs, and it can all of a sudden change and start to think on its own, creating efficiency and removing the people that would normally need to be there to reprogram that robot. So if I'm on an assembly line, for example, and let's say I'm at Ford and I got an assembly line, those robots, they're programmed. They don't think on their own. It's like, once this gets placed here, I put a rivet, and it goes next, rivet, next, and it does it all day long, 24 hours a day, 365. That's robot. AI, or a company like Pathway, I think it's UPath, right? Here's the ticker symbol for this one, PATH. UPath here, let's go to the daily because it looks a lot better. UPath is a company that creates AI systems for assembly lines. And what it allows you to do is you could connect to that robotic system, and you could say, you know what, you're putting those 4 rivets right there. I'm on vacation in I'm in Thailand on a beach. I'm going to send in a graphic of the door, a picture of the door, and I want to add a 5th rivet right here. And I can send that through UPath's technology directly to a computer that says to the robot, hey, let's just modify right here and update that. So now all of a sudden, at the ease of modification for these systems can be done from anywhere in the location or anywhere in the world simply by sending into the network or making total assembly line changes. Maybe I want that robot to not make doors. I want to do something else, and it's going to just be done all through virtual and no programmer needed. The computer will tell it how to do it. You can send in pictures or tell it to do the action, and it will make those modifications to the robot. Pretty crazy. Yeah, Martin. I don't think we'll see it now. I think the AI bubble will probably happen next year. I think we're a little early. I still think that growth spurt is going to come. I think you're going to see a lot of share prices spike, and that may change my market forecast. Remember, my market forecast for the end of the year was bearishness. I think what you'll have happen at the end of the year is, let's say we have the S&P 500. At the end of the year, 30 stocks will have great returns, and 470 will be negative on the year. That's just kind of what I think will happen for this year. I think there'll be a few that do great, and those will be the AI bellwethers, and the rest of the stuff is going to pretty much fizzle and drizzle. They need to set up their cameras at each part's place. They will probably catch Zelensky and Biden. Not even going to go there, Bill. Not even going to go there. AI has been around for a while. Yep, it's been a hype term now. It's been there for a long time. You're absolutely right. Big data, cloud, blockchain, sharing, securitization, virtualization, and on and on and on. It has been there for a long time, but I think what happened is what ChatGPT did was just like it slapped everybody in the face, like a wake-up call, like, holy cow. It is actually learning. They put all this data, and this computer now is this hyper intelligent thing. So I think that that's just the realization that kicked off AI, and now all of a sudden that's where the money's going. So that's going to bring more money into businesses in AI. So that'll create that bubble. Hover bikes and drones, shared computing services, blockchain verification, and AI algorithms generated services. The company is headquartered in Tokyo, Japan. Oh, you're talking about Arwin? Yeah, I think you brought this one up before. AWIN, not Arwin. Yeah, well, they need to find a drone to bring them out of this horrible slide that they're in, right? This is a one damn ugly chart. Oh, this is a SPAC? Is this a SPAC? It looks like it's a SPAC. The $10 strike price here tells me this is a SPAC, so I really have no love for SPACs whatsoever. Are the brains behind AI mathematicians? No, I don't think they're mathematicians. I think what the brains behind AI are programmers and engineers that create systems for another system to learn. So, for example, with ChatGPT, they're putting in all this information into a data set and then allowing that computer, that AI, to process that information and then programming it how it disseminates that information. So, for example, they're creating a human interface where I can now ask ChatGPT any question, and ChatGPT will give me a response based off this gajillion hours worth of data that they've programmed into it. So I don't know if it's necessarily math. I would say it's engineers, because there's going to be some mechanical engineering in there. Certainly computer programming goes into it. But again, AI systems all depend on the application. ChatGPT is a pretty easy one. It's just saying, take all this information, read it, and be able to spit it out to me in any form I want very quickly. You look at Midjourney. Midjourney is now saying, be creative. I think the algorithm behind Midjourney is far more impressive than ChatGPT, but most of us are going to use ChatGPT on a regular basis. Okay, I'm going to wrap up here. I got to get going here. Let's go to our economic calendar and earnings for mañana. So here is what we have cooking for tomorrow on the economic front. It's actually a pretty good day. I think I have the filter on here, so let's get that off. All right, perfect. So here's what you have for tomorrow, the 26th of May. It's all U.S., and it's a big day for the U.S. market. It's kind of strange to see just U.S. stuff like this much. You've got core PCE price index, which of course is the major thing that the Fed is looking at, so be careful of that. All of these funds I'm going to read you here are pre-market. Those are 1 hour before the market opens. That's core PCE price index, durable goods, orders, goods trade balance, personal income, personal spending, and wholesale inventories, all of which is before the market even opens, so that should create an interesting open tomorrow. Durable goods orders are the ones that are really in question. They're expecting a contraction in those big ticket items. Again, refrigerators, TVs, and stuff like that. They're expecting a 1% slide in durable goods orders versus the previous month, which was 3.2% gain. And 30 minutes into the trading day, you do have an announcement coming out, but I don't put too much emphasis on it anymore. That is the University of Michigan consumer sentiment and inflation expectations data. They're expecting inflation right around 4.5%. So that was your economic announcements. And if I remember correctly, the Buckle reports tomorrow and somebody else, but no real big names reporting tomorrow earnings-wise. Damn you, Tom. I'm just about to wrap up, and here comes Tom with his Charles Schwab question. I tell you, Tom. All right, fine, SCHW. Every time I try to get out, they pull me back in. Charles Schwab, as I mentioned, I'm long-term bullish on Charles Schwab. I don't own any anymore. I did have some for a little bit, but I've subsequently dumped that one. Actually, I didn't own it. It was all put options on that. Nice move up today, 4.15%. I didn't read on any news that went on with Charles Schwab or whatsoever, but I still don't think you're out of the woods yet. We haven't really made a new high. If I look at what's happened since, I'll go all the way back to January of this year, lower lows, lower highs. Even though we had this big outlier tail on March 13th, it still feels like it's in a downtrend. I like it long term, but right now I'm just kind of want to wait. I think it's aggressive if you buy long now. If you wait till it gets above, let's call 56.40, then I think it's a much safer place. Yes, you're leaving some money on the table there, but I'd rather leave some money on the table than jump into something that still has pain in it. And again, I don't know if we're out of this banking system garbage yet. I still think that there's a problem in the banking system that could arise. I hear too many industry experts are saying that there's more damage coming in the banking sector, and I'm like, I don't see it. I feel like the main runs have happened, but I've been wrong before. So if you're a long-term holder, I think that Charles Schwab is probably okay. Anthony says R1 IPO high was 18 bucks. Has an AI blockchain with more. Well, it's not it is a bank. They are a financial services company, right? But they're in that index, so they got brought down with the banking index, right? As the financial markets tanked because of banking, Charles Schwab got caught up in that because they had apparently a lot of long-dated maturities in their accounts. That was one of the issues. The other issue was they were worried there was going to be a run on the bank and people were taking money out of Charles Schwab. Yeah, it's more a brokerage firm and financial advisor, so I think that does separate it from them. Again, one of the reasons I'm bullish on it. I thought it got dragged down initially unnecessarily with the First Republic and Silvergate and Silicon Valley Bank garbage that happened. I didn't think Schwab was going to tank as much as it did, but I was wrong there, which would have created a better buying opportunity. You have to know a lot of math for AI, like 6 semester calculus and more. Yeah, well, I didn't even make it past 1 semester calculus, but I think it's multiple disciplines are going to be needed for AI. All right, I got to run. I'm going to wrap things up. We did the earnings, which are not much. We did the economic calendar, which that'll help. And then we talked a little bit about the AI arms race. Just something to think about for the markets going forward. I have a feeling this will be much more of a discussion in the coming months as we look at different technologies, which areas might be implementing AI with much greater intensity, and how we might be able to capitalize on that one. So you forecast more next week, or more bank problems next week? We shall see. We shall see. Right now, do I have any exposure to banking stocks? I do not. Nope. No exposure to banking stocks. I got beer stocks. I got some tech stocks. I got some commodities. That's about it. All right, that's going to do it for me, everybody. Hope you enjoyed. Hope you learned something today. If you did, that's awesome. If you didn't, well, we can figure out something to teach you next time. You can always email me at TraderMerlin@gmail.com, or go and put down below any of the YouTube videos your comments and questions like Les did today. So Les, thank you very much for the questions out there. I know I don't answer all of yours, so I apologize for that, but I do try to get to most of them. As Sly Dog says, hit that like button, share it if you want, subscribe if you're new, and I will see you all tomorrow. Take care, everybody. It's Whiskey Day on Friday. I can't wait.